Hi guys, today we will start the balance of payment. The two important accounts maintained in international trade that are calling the balance of payment and balance of trade. First we will try to discuss the balance of payment. Then balance of payment is a systematic record of all economic transactions between the residents of a country and the rest of the world in a given period of time, usually 1 year. In other words, it can be said that balance of payment of a country is a systematic record of all the economic transactions between its residents and non-residents. Balance of payments include not only the value of goods exported and imported, visible items, but invisible items and capital transactions are also recorded. Now, if we try to record the balance of payments, then we will try to talk about the economic transactions in BOP. Then if we try to talk about the economic transactions in BOP, then which are recorded in BOP includes visible items, invisible items and capital transfers. Then first I will tell you about the visible items. All types of physical goods imported and exported are known as visible items. Invisible items, all services which are exported and imported are known as invisible items. These include services like insurance, banking, shipping, consultancy, investment, income like interest, profits, dividend and royalties, and unilateral transfers like gift, donation, etc. Capital transfers. Items consisting of capital receipts and capital payments are known as capital transfers. These transfers involve transfers of assets and liabilities. Now we will go with the components of BOP. Then if we are trying to talk about the components of BOP, then we have the majorly the two components. One is a current account and next one is a capital account. Then first we will try to discuss the current account. Balance of payments of a current account is a statement of actual receipts and payments relating to export and import of goods and services and unilateral transfers during a given period of time. There should be various components of current account. You will see on the screen uh, export and import of visible items, export and import of invisible items, unilateral transfers, income receipts and payments from and to abroad. Then now we try to discuss one by one the components of current account. The first one is export and import of visible items. Current account includes export and import of visible items or goods like wheat, rice, machine, etc. The next one is export and import of invisible items. Current account also includes export and import of invisible items or services like shipping, insurance, banking, etc. Then unilateral transfers. These are transfers between residents and non-residents. These can be private as well as public, which include gifts, donations, etc. or official transfers including donations, grants in cash, etc. Income receipts and payments from and to abroad. It includes factor incomes in the form of interest, rent, profit, etc. Overall, current account structure is like uh, relate to the debit and credit side. Then all exports, goods and services are recorded as positive sides, that is calling the credit side. All imports, goods and services are recorded as negative items like debit side. Receipts of unilateral transfers are recorded as positive items like in credit side. Payments of unilateral transfers are recorded as negative items like debit side. Then overall we can say all the transactions of current accounts are either recorded as credit items, that is calling the all receipt side, or debit items, that is calling the all outflows of foreign exchange. Then now after the current account we will try to discuss the capital account. Then capital account. Then capital account records capital transactions such as loans and investments between one country and the rest of the world. which causes a change in the assets or liabilities status of the residents of a country or its government. There are various components of capital account. On a screen it's available. You will try to see the components of capital account. The various components of capital accounts are foreign direct investments, loans, portfolio investment, banking, capital transactions, etc. Then now we should be go with the first, that is a foreign direct investment. It includes foreign investment, foreign institutional investment, or portfolio investment by the residents of the country in abroad or by rest of the world in domestic country. The next one is the borrowings. It includes commercial borrowings by the government or private sector from rest of the world and external assistance to or by a country. The next one is official international reserve. It includes the changes in gold and foreign exchange reserve with the central bank. Then overall structure of capital account relates to all capital transactions causing flow of foreign exchange into the country are recorded as positive items, and positive items side, that is a credit side. And then all capital transactions causing flow of foreign exchange out of the country are recorded as negative items, that is calling the debit side. Other than that, if you try to go with the difference between these two, then difference between current and capital account, then the first one difference, current account concept is a flow concept, but capital account is a stock concept. And then one more, if you try to go with that, then in current account, the transactions which do not affect the cap assets or liabilities position of the country, but in capital account, the transactions which affects or which affect assets or liabilities position of the country. And then remaining you try to create with the help of your definition and with the help of your components and even by the structure of the current account. Okay guys, have a good day.